What is going on, investors? Hopefully you guys are having a great morning. We're going to take a look at Splunk today, ticker symbol SPLK. This one reported earnings after the bell yesterday, and spoiler alert, they were an absolute disaster. Investors are punishing the company down about 22%. When we get over the stock chart, I put this on a weekly view, because this gap was so big and the price action didn't fit on my screen. So we're on a weekly view. Now, what typically happens with these big red candles, investors step in and you see rather heavy volume here. So this one is retracing back up a little bit, but we're way off where we were at yesterday. We were up here at over $200 per share. Now we're down at about $160 per share on Splunk. Now, what happened? So you're probably wondering what the heck happened with this one. A couple of things. When we get over to the numbers, there's a lot of really negative things happening with these numbers. So we're seeing revenues are declining. Our gross profit is declining. Our operating losses is increasing. Our operating expenses are increasing. So we're increasing expenses while our sales are going down. And that is a problem. Okay, investors don't like that. The other thing is JP Morgan really used a great term here. They were blindsided. Okay, a revenue came in really light. Some deals slipped through the cracks. The guidance came in light. And so what happened is the executives over at Splunk didn't do a good job kind of informing JP Morgan and these big investment analyst groups, about how bad the quarter was going to be. They basically just dropped it all on them, all on earnings day, which, Wall Street hates, okay? They hate when numbers come in light and then the revenue, it's a double whammy. The revenue forecast came in lower than expected. So it was just a double whammy, and stocks like this tend to get punished when something like that happens, okay? And it probably was a learning experience for this management. If they don't learn from this, that is a problem, okay? They need to do, and they had a great excuse. Look, I don't know if anybody has heard, there's a pandemic going on across the world. They could have used that as, and I'm not saying they should use it as an excuse, but they could have used it as an excuse for kind of a bad quarter, okay? They could have telegraphed it. They could have pre-released earnings, or they could have, they could have gotten on TV and kind of announced maybe a poor quarter than what was happening, okay? They could have telegraphed this sooner, but they waited all the way until earnings to really drop the bomb on investors, and we see what happens. Now, this might create a buying opportunity. When we jump over the chart, we might see something like that. Now, I kind of telegraphed, they came out with earnings here. Unfortunately, they've got these headers on a different page, so I'm gonna have to scroll down, but we've got 19 over 20 in the most recent quarter here, and we've got 19 over 20 here in the 9 months. Now, like I said, this company is in a transition period. I did a video on this company a couple months ago where we talked, they're in a transition period. They're moving from this license revenue, which is super high margin, okay? It's really driven up the stock price, because take a look at this. We spent $5 million on the quarter on this license revenue to make $240 million. Holy moly, those are great margins. And then we went from we spent $16.59 to make $565, okay, for the 9 months. They're phenomenal margins. Now, this cloud and this maintenance, I would guess, is kind of a blended service, because these maintenance costs are not necessarily going down as license revenues. So you kind of look at maybe of a blended margin here. You spent 63 to make 144, and you spent 68 to make 173. And it could be that there's more stock-based compensation in these costs. It could be that there's more upfront costs to acquire the cloud customer, and then recurring, the margins will increase. That is possible as well. Obviously, you have these really big sales and marketing. When you're transitioning your business, you're going to probably have to spend more on sales and marketing. So that might explain when we get down here to operating expenses. Notice that we went from 566 up to 587 on our operating expenses. So our revenues went from 626 down to 585. Our gross profit went from 518 down to 421. That's nearly $100 million. Now, unfortunately, our operating expenses went up from 566 up to 587. Guys, that's an absolute complete disaster of a quarter, because take a look, we lost 47.5 million and now we lost 165.5 million. So our revenue's going down, our gross profit is going down, but our expenses are going up. That is a problem. Wall Street does not like that. And including when you attack on top of that, you're transitioning away from your high margin business and you're moving into what appears on the surface to be a slightly lower margin business, at least at the current time frame. So that's a problem. For the 9 months, similar thing is holding true. Okay, our operating losses have accelerated. We went from 280 up to 700, and then we went from 1.5 billion in cost up to about 1.78 billion in cost. Our gross profit also went down from 1.2 down to 1 billion, and then our revenues also went down from 1.5 to 1.56 to about 1.5. Not a good situation here, okay? This is pretty much a disaster, in my opinion, in terms of reading this chart. And then when you take a look at maybe an evaluation, you got a $33 billion valuation on this one. And, you've got declining revenues, increasing costs, declining operating profit. It's just not a good recipe, and we see here the stock is being punished, although it has retraced a little bit here. And so I've marked out some levels here. We've gapped underneath this 50-day moving average here in green. This, if the stock hovers down here for any period of time, this is likely to turn negative. Now, the good news is investors have stepped in here. Okay, you have a lot of sellers baked into this volume here, but it appears some buyers have stepped in here and supported the stock here. Now, I would not necessarily want to step in here right away. There's actually a really good level here at 140. Okay, whether or not the stock gets all the way down to 140, I don't know, but I'll tell you what, if the operating statement didn't look as bad as this, I probably wouldn't necessarily, try to pinch pennies here. And I'm talking from a long-term perspective, okay? If you're trying to trade this one, there's probably a little bit different technicals. You can probably get on a 60-minute chart. You can probably, get on a daily chart or whatever and play this one a little bit differently. I think there's, we're definitely hovering in the middle of a range here to where the magnet for price is probably going to be back up here into the 160s, 170s. So if you want to play this in a trade, where we're at right now, 160 back up to the 170s. Again, that's where our moving average is. That tends to be kind of a magnet for price, especially when you get below it. Notice every time the stock has gotten below this moving average, what does it wanted to do? Wanted to get back up and get it back above it. So the similar thing, it wouldn't surprise me, honestly, similar thing happens. This thing gets down below 160 and then wants to come back up here to the 170 price range. That's kind of the top of the range. I wouldn't be a buyer up here. We've got some resistance points here as well. Now, what would make this far more attractive from a long-term position and certainly a trade as well is this support level here. So you've got a fair amount of support here at this we'll call this about 140. It's actually a little above 140. Anywhere in this range, I'd be a little bit more excited here. I think I'd be more excited about making this a trade here. Obviously, if you bought in these upper levels up in here, I wouldn't necessarily be, running out to average down, certainly with a full position. I wouldn't mind. Let's just say you have 10 shares of Splunk, and today on this big gap down, you want to add 2 shares, 3 shares, whatever it might be in that range. I wouldn't necessarily mind that. But the trend has reversed. Okay. The trend in this stock has reversed. This to me looks like, it could be a topping pattern, and we could trade down in these ranges, in the near future. That wouldn't surprise me as well. I fully anticipate this stock probably coming back up into the high 160s, maybe 170s, and then maybe bouncing off that and coming back down here. Again, the first area where I'd like it is closer to 140. But this was kind of a perfect storm. From a fundamental basis, this one doesn't scream buy to me. The chart might say differently, but just from a fundamental perspective, when you've got declining revenues, declining gross profit, increasing expenses, that's just not a recipe I want to get involved in. Okay, can this stock rebound? Absolutely. Will buyers step in when you see these big declines? Absolutely. But just from a fundamental perspective, I'd rather have my money parked with other companies. I don't want to go off and rattle off names that are in my portfolio. I don't want to act like I'm out here talking up my book or my portfolio. I would just say that, in my opinion, I have a portfolio of stocks, and I get to choose where I allocate money. And quite frankly, I just think there are probably other companies out there firing on more cylinders than this one that I would rather pour gasoline into than a company like this. Now, can they turn things around? If there's evidence of that, certainly would be interesting to see. Now, guidance did come in. They have Q4 at 650 to 700, which would be a re-acceleration, because you see here we went from to 626. So they are actually anticipating a really nice quarter. So we'll see if that materializes, okay? Because again, you can't necessarily believe them since they came in so light in the most recent quarter. But this is a downside revenue forecast as well. I guess they were expecting a little bit higher. They were at about 783. I don't know if this is guidance, but they've walked that back to 650, 700. But that would be a re-acceleration of what we see here. And quite frankly, that would be a positive for investors. So if they are able to hit this target and exceed it, I would expect this stock to kind of resume, not necessarily an uptrend, but resume a positive investment thesis going forward with investors and investment banks. So that was Splunk for you. Interesting stock. Is making a comeback in terms of price, which is often what you see here with these things, and there's certainly probably a better trade, in my opinion, than maybe a long position at this point, but we'll see what happens going forward. We'll certainly keep an eye on this one. Let me know in the comments down below what you got going on with this one. Some of you likely know this company a lot better than I do, and maybe have followed it and be an investor in this one for a longer period of time. Maybe you got a little bit better visibility than I do. I'd love to hear from you in the comments below. Thanks for tuning in. We'll be back again soon. Good luck with your investments.